Hi everyone, welcome to today's episode where we'll be using technical analysis to find good trading opportunities in the markets. So for today's trade of the day, we will be looking at pound CAD. Why I chose this pair is because the internal structure of the pound CAD looks very clean, very simple and straightforward. At the same time, later on in the day, we also have high impact pound and Canadian news coming up. So what I have here is actually the pound CAD. Okay, let's start off with the 4-hour time frame. All right, following price action. Right now, before I introduce the price action part, if you've seen the previous videos, you know that this has been repeated a number of times. When markets are in an uptrend, all right, markets tend to make a series of higher highs, lower lows. The opposite is true when markets are in a downtrend. They tend to make a series of lower lows and lower highs. All right, so using this principle, okay, let's put it into this area on the 4-hour chart. Right, we see that the market made a high, made low, made lower high, lower low, lower high, lower low. So we know that here the market is in the downtrend. However, when the market came back up here, it made the same high, right? So this is the first clue that the market is telling us that the trend has reversed. Further, the market came back down. Instead of a lower low, okay, the market has made a slightly higher low. So this is the second clue that the market is telling us that, hey, now the trend is changing. All right, so now market has made a low, made a high, it made a higher low, it made a higher high, higher low, higher high, higher low, higher high, and it made a higher low. So if we were to connect all these lows, okay, what we essentially get is an ascending trend line support. Alright, try to tap as many candles as possible, okay, without cutting the candle bodies. Okay, we get an ascending trend line support. So what we can expect the candle price to do is to push higher and make higher high, right? So let's use Fibonacci retracement from the last leg, from this low to this high, open all Fibonacci ratios. Right, we see the price tap the 61.8. Right there, tap the 61.8, and we can expect it to push higher, all right, at least to the last swing high and possibly even the negative 27, right? But for now, let's just put our target at the last swing high over here. So this can be our take profit. All right, so we have our take profit, and I'm just going to highlight the 61.8. Okay, so we have our take profit, and very quickly, let's go down to the 1 hour. So on the 1 hour chart, right, this is what we see. Okay, we are seeing that price is actually coming back up. All right, so what we have to do is look for our entry and the stop loss. Okay, so price is currently in the midst of a up push over here. Let's use Fibonacci retracement from this low to where price currently is. Open all Fibonacci ratios, right, and in line with this trend line, okay, we actually see that price could very well pull back to the 50% level, right? So the 50% level has a swing low over here, a graphical low, okay, in close, and it's also in line with the ascending trend line on the 4 hour. All right, so with that, okay, that can be our buy entry. So I'm going to highlight the 50%. Now that we have our buy entry, very quickly, we just have to determine where will our stop loss be. Right, so there are multiple ways of putting stop loss, but the guiding principle for stop loss is the level at which you know your trade is definitely wrong. Okay, so we can actually put the stop loss at this 61.8 level. Okay, reason because it's really a zone, right? There's really a zone over here, okay, from the last swing low in close, all right, to the 61.8 level. So I'm backing up my stop loss to give my trade a bit of room to breathe. All right, so there you have it. Let me zoom out to the 4 hour. Okay, this works out to have a very nice I'm waiting for price to pull back. This works out to have a quite nice risk reward trade. Okay, last but not least, we can actually confirm the momentum of this trade by looking at moving averages. All right, so we choose the exponential because the exponential actually gives more weight to current prices. And I will not use 9 because 9 is too sensitive. Normally I go for something wider, such as 21, which is a Fibonacci number, or we can even use 34. So when we use 34, we see that when markets are in an uptrend, okay, the moving average actually holds price very nicely, right? So we can be sure that price should continue to push higher as well. Right, so thanks everyone for tuning in to today's trade of the day. I wish you guys all the best. Have a great weekend ahead, and I'll catch you guys the week after. Take care.